Are you ready to purchase a home? Let's go over the pros and cons of buying a home right now. Hi, I'm Samantha Olazabal with Keller Williams Green Valley Partners. Buying a home will be one of the biggest investments you will ever make. Therefore, it's really important you know if you are ready to purchase a home. Let's get started with the pros. One of the pros is building equity in your home. This represents the amount of home that you own free and clear from the remaining balance of your mortgage. For example, let's say you purchased your home for $600,000. You've owned it for 10 years and you initially put down $60,000. Over the 10 years, you've paid off $200,000. This means you will have $260,000 of equity in your home plus the appreciation you've gained over 10 years. Having equity in your home allows you to build wealth and eventually financial freedom. Imagine paying off your home after 30 years. You get to enjoy retirement with a much lower monthly expense. This is much better, in my opinion, than paying landlords money until the end. And if you like your family, you get to leave something for them in the end. On average, home prices increase approximately 4% a year over year. Just take a look at the graph. As the home prices go up, this increases the equity in your home as well. Worried about interest rates? Here's a reality check. Interest rates are considered around the historical average from 1990 to 2021, around 6.5%. Do you think we're going to see 2.5 and 3.5 interest rates in the near future? My opinion, highly unlikely. Currently, the interest rates are hovering around 6.5%. Of course, this all depends on each person's financial situation. It's important to focus on the now and the appreciation you will earn if you choose to purchase a home and stay in it. Another thing to consider, you are allowed to take your mortgage interest and your property taxes on your home as a deduction from the federal income tax. But please speak to your CPA about that. It's different for everybody. Another pro, as you maintain your mortgage payments, your credit score will increase. At first, when you do take the mortgage out, it's likely that your credit score will lower. But once you make a consistent payments, your credit score will increase, which will allow you to have more buying power in the future. Now, I'm an animal lover. I have 3 dogs and 9 chickens. I would be devastated if I had to give up my animals. Time and time again, I hear how people have to give up their pets because their landlord will not allow for them. Sometimes you have to pay an extravagant amount of money to keep them where you're living. When you own your own home, you get to make the rules. An exception to the rule, though, is if you do live in an HOA or a condo, they can limit the amount of animals. Just keep that in mind. Another pro, I think, is stability. This is huge. The landlord can decide to sell your place where you're staying at any given time, and they can increase the rents. As a homeowner, they are less likely to move. According to the National Association of Realtors, communities that have residents settled in for a long haul often have stronger social ties, civic engagement, and social capital. Here are some cons when you are thinking of purchasing a home. Yes, it costs money, people. People say you have to have 20% down, but let me tell you, that is a myth. You do not need to have 20% down, but you will need to come up with at least 3.5% to purchase a home. Some mortgage companies can offer first-time buyer programs where you can almost 100% finance each home. Each lender is different, so you definitely have to do the research and ask questions. There are also closing cost fees, which the buyer typically will have to pay when purchasing a home. Considering that we are going into a shifting market, sometimes we can negotiate to the seller for them to pay them. Another con you need to consider is that you now have to maintain the home. It is not up to the landlord to come and fix the problems or the property manager. Anything that arises is now your responsibility. Depending on how old the home is, experts say that you should keep at least 1 to 3% of the purchase price in a savings account, just in case. You never know what may come up after closing that the seller was unaware of. Here's a list of other fees that you may have to consider when you're thinking about purchasing a home. Property taxes. Property taxes usually help take care of the local services and roads and schools and fire department services. If you move into a community that has an HOA, you'll most likely have to pay monthly or quarterly fees that help with any of the community amenities. Utilities. You have to pay for your own utilities. Sometimes when you rent, it is included, but this you will have to pay on your own. Another is homeowner's insurance. You want to make sure your home is covered in case of a catastrophe. Hopefully that never happens. If you do put down less than 20%, there's also something called PMI insurance. This is private mortgage insurance that you have to pay that's included in the mortgage payment until you have 20% equity in your home. Another thing to consider is if your income is unreliable. It might not be time yet to purchase a home. If your income is unreliable, it may be hard to get a loan. Lenders typically like to see 2 years of tax returns, or they may charge a higher interest rate to offset the risk if you cannot provide it for them. Bottom line, buying a home can give you stability and allows you to have something to have all your own. Over time, it becomes an investment in your future. Click below if you'd like to see my home buying guide. Also, if you're interested in seeing the calculations of buying versus renting, click below as well, and I have a calculator just for you.